everybody, and this is Free Willy from Freedom Stock Alerts. And today we're going to go over moving averages, okay? Two that I use on a daily basis when I enter and exit trades, and they are going to be the 9-day moving average, meaning that's the average of the stock movement the last 9 days, as well as the 21-day moving average, right? And two very important things to use while day trading, scalping, or even looking for entry and exit positions of a stock. I typically set them on the 5-minute and the 1-minute when I'm entering and exiting a trade, typically the 5-minute mostly. And a good rule of thumb is I always want the 9-day for calls is I want the 9-day on top of the 21, okay? And I want to have a candle open on the upper side of it, okay? So you can see here, 9-day crossed right here, crossed right here about right at open, and we had a candle open and it just started ripping. Right? And you can see the stock came all the way back, touched this 9-day, just textbook trade, right? And stock ran and ran and ran, and then all of a sudden, boom, we get a candle that opened below the 9-day. So it's like, uh-oh. So let's see what the 21-day did. So it held, right? And it ran, but then all of a sudden, the 9-day crossed, right? Very big indicator to get the heck out of there, okay? Very simple. It's textbook. And if you go back and look at many of these stocks, you'll find the same thing over and over. So that caused the chop and the sell-off. So, obviously enter here and I would have probably exited here because I knew that the trade was probably over. But, the final kiss of death was the 9-day crossing and it goes below. So that puts it into a bearish swing. Comes down. Again, here we go. We had a cross of the 9-day coming above. Momentum. A little bit of volume pickup. And we got a pump, and then it broke it. And that was like testing it. And then it broke again, and then it fell down. So, this is the sell-off. Most likely a lot of profit taking that's going on there. So this same thing, okay, works, okay, for things on the downside. So you've got a stock that's trading up. This is Amazon. Broke. We had a cross, okay, where the 9-day came below, and that just sealed the deal, right? You can see how that stock just stays right on that line, right? It's a good sanity checker, right? As stocks start to sell off and, sometimes they'll get way away. Sometimes they'll be really far away from here and it looks like, let's go back to AMD for a second. So, you get way far away and it looks like the stock's going to come down, and it can get kind of scary, but don't worry, the further it gets away, it will kind of come down and test. And that's what it did here. It got real far away on that big push. And then it kind of tested and confirmed, and boom, another push shot back up. So if you guys aren't using the 9-day, you need to be using the 9 and 21-day for, day trading in and out. It's probably the most used indicator on fast because it responds very quickly. So for all more alerts and videos and training things and even stock alerts, you can see us at www.freedomstockalerts.com. Again, I am Free Willy. Come see us in our trading room. Thank you very much.